What is up, YouTube? Welcome back to Stacks by the Numbers, and today is Wednesday. Wanted to do a quick update here on a company we looked at a couple of times in the past, recently coming off a pretty decent quarter, and now we have earnings coming up in about a week. Name of the company, ORGN Materials Incorporated, ticker symbol ORGN, listed here on the NASDAQ. Stock has been rallying, as you see, down in the end of March. You can see we dropped to new lows down there, 44 cents and change, and since then the stock is up roughly 200% from those new all-time lows, and we have these earnings coming out May 14th, and you can see estimates of a loss of 10 cents on revenue estimates of 6.484 million. In my opinion, they should be able to do it. And here, after the company did get beaten up, it actually went even lower than I actually thought. I thought we'd kind of stop here, maybe about like the 60, 55, but obviously it continued to drop. But now we're gaining some momentum. And it's funny because even the last time we looked at it, I said that in my opinion, a lot of the numbers don't actually look that bad. But the problem is the company was just kind of inconsistent, and I think everyone is just waiting for the revenue to actually come in. This is what I said many months ago back here before the bull dropped, and we can see that the earnings report that came out about 3 months ago, end of February, you can see the company did just that. And EPS estimates were a loss of 14 cents. Company lost only about 9.4 cents. So they're keeping the losses in line as well. That's another important thing, right? Because we know that the company's still kind of in its state of infancy, but you can see for the last 4 quarters posting much more of a narrow loss than Wall Street expected. And now we're expecting a loss of 10 cents, and we posted 9.797. So if they are able to post 9 or 8 and keep that EPS above those estimates, in my opinion, it may not get beaten up too much, if you will. But the revenue came in beautifully, and this is what we were expecting back here, right? We were expecting that double-digit, well, 8-figure revenue, right? Above that 10 million mark. That's why I even said I think if they come in close, like 11, 13 million, it might not be that bad, but they ended up coming in with only a touch over 7 million. Estimates were up here at almost 15 million. So the stock continued to get beaten up, and now we come back here. Estimates jump back up to that 8-figure mark, 12.2 million. The company's able to post 13. So that's why I think it really started to gain a lot of momentum. But now with this quarter coming up, see 6.484 million, and if we go back, obviously they posted 13, but before that they brought in 714, and before that 6898. So it was literally this quarter a year ago was the last time that they technically brought in revenue below the estimates that are expected to come next week. So of course, if this is their lighter quarter here in Q1, of course anything can happen, and the company could post, like 5.8, 6.1 million, and they can miss slightly. But also on the flip side, the fact that they've recently kind of geared it up, and of course are coming off that big Q4, in my opinion, I'd probably give them the benefit of the doubt here. And I know I kind of flipped the script, and that's literally what I say when I look at these companies, right? If they're overvalued coming out of the gate, if the earnings are inconsistent, if I, in my opinion, see the potential that the stock could go lower, a lot of the times they do go lower, and people think I'm just hating on their positions, but I'm not, right? What I'm waiting for is the bottom of the bottom to come in, the earnings to actually show us evidence that the company has potentially found the bottom, and now the rebound is taking place. And now the stock gets some life. And now again, if we come out and beat earnings again, I think we're going to go probably back up to here, I would say conservatively, which is about 180 and change. What was the high on this candle? 185. Okay, so it doesn't seem like a big move, but even from this level here, after this rally of 120, you're talking about a 50% jump potentially if this company beats earnings. And depending on what they report, obviously, if they pile on some positivity, we may climb into the 2s. But I think that if they're able to beat here, and potentially 3 months from now beat again, I think that'll be enough to potentially force the stock up to fill that gap. Looks like it's about 364 was the low there, 367, yeah, so 364, which from $1.20 would be roughly 200% from where we're currently trading at here at $1.21. So in my opinion, there is potential here, but of course, like I always say, in my eyes, it's up to the revenue, it's up to the company. So after going on this rally, we'll look at stock charts in a second, but we can see after going on this rally, I mean, again, technically we did just run like 200% from those lows. So I just want to say that in my opinion, we definitely could have the potential to start pulling back a little bit. So if you wanted to potentially begin piecing in here at 120, understandable. But again, that's why I say, in my opinion, I don't like to go all in, because now if you turn around in 2-3 days, all of a sudden the stock's back down at $1, right? You're immediately taking a hit, when on the flip side, someone who didn't go all in could say, oh, okay, I started the position at 120, I'll buy more shares down here at $1 or at 98 cents, whatever the heck it is, right? But we can see on the 1-year fib, we got above this top fib level here of about 95 cents. So that's why I'm saying we could potentially start to pull back to around $1. But yeah, I mean, it's potentially starting to turn the corner. So hopefully the company is able to beat estimates again and keep that consistent momentum going, right? The last thing you want now is for the company to miss on that lower estimate and pull back to like, 90 cents, 80 cents. Now you got to wait like a full 3 months to see if the stock rebounds again. It would really just throw a wrench into the machine right now. But we can see, yeah, minus that Q3, company beats 3 out of 4. And on the EPS side, again, we're still operating at a loss, but it's much, much more narrow than Wall Street is expecting. And if we look at the debt, we can see Q4 debt happens to jump up, right? So we were at 872 million, down to 79, 77, back up to 81. Now we're at 97, right? So it seems like the debt increases here going into Q4. However, you could also see the free cash flow now is only minus 26 million. So that has been getting closer and closer to flat. And you can see that time last year, free cash flow was minus 42.5 million. Steam friend, my apologies. But here we're at about minus 26 million. And also the cash was dropping down, right? Because we're operating at losses here. And you can see, though, 66 million here, this blue bar, 66 million, 66.1. As of last quarter, 75.5 million. So the company does have cash on hand. So even though we are operating at a loss, and it's technically not, like the best of the best stock out there, we have the ability to keep ourselves afloat a little bit. And also, one little concern here was the operating expenses. As you see, the revenue did chunk up to that 8-figure mark, but you can see the operating expenses jumped about 40%, it looks like, quarter over quarter, getting up to minus 17.4. But if we look at the numbers, we can see the gross profit was negative into the 100,000s, and now as of last quarter, almost 1.25 million. The operating income did drop a little bit more, of course, because the operating expenses went higher. But if we look at like the balance sheet here, we can see the assets kind of slowly went down while the liabilities completely chunked down. So these liabilities, I mean, we're talking a drop of like 60-70% here over all these quarters. And we can see, again, assets minus liabilities yields total equity. And you can see the equity has been consistently increasing. Had a slight decrease there last quarter, but look at those liabilities now, sub 40 million. And I told you, the better the equity, the better the book value per share. And you can see the book value has essentially been increasing and had a slight dip last quarter again, but we're sitting here right now with a current book value of $2.90 and the stock trading at $1.21. This is why when looking at a lot of these fundamentals, a lot of people couldn't understand why the stock was consistently dropping and hitting these new lows. And this is why I say sometimes, even on the short selling side, there can be an overreaction as well. If we think the stock really shouldn't go below 80 cents, 70 cents, and then all of a sudden we hit new lows, 55 cents, 43 cents. It's like, where the heck did that come from? And I appreciate your concern. But again, it actually technically makes this rebound recovery story even better. If the stock, like I said, eventually gets back to that book value and could potentially gap fill back up to 360, right? I mean, think about all the people who said, no, I'm keeping my eye on the prize. I'm adding to my position here at 65 cents. I'm buying more here on the breakout at 82 cents, right? Now the stock's up at 120, starting to gain some momentum. Had a nice 10% day today. So this is why I say, if you truly do believe in the company and you see the growth, and the company, for the most part, is consistent, then I can understand if you buy these quote-unquote over extreme sell-offs, if you will. Because again, they technically beat on revenue like 3 of the last 4 quarters, right? There was only this one big miss here. and then they came back and had a really nice quarter. So this is why I'm saying the juice may be worth the squeeze here, and you may be stepping in here at $1.20, and we can easily drop back down to $1.90, and you can immediately take like a 20-30% loss. But on the flip side, the reward is worth the risk, if you will, because again, if they happen to beat earnings again, we could immediately, in my opinion, see a pop back to 180 and then potentially the gap fill up to 360, right? So if you have the potential to make 50 to 200% to risk 20 to 30%, those are the types of plays that a lot of people look for. But we'll switch over to stock charts real quick. I'll let you go. There's another concern, right? The RSI up here now north of 70 here on the weekly. And we can see we have gotten above that. But as we did rally up and hit around 80, that's where the big red candle came down and we corrected all the way back down to sub $1, right? So that's why I'm saying we might not necessarily pull back to $1, but if we start to sell off from here, I really don't think you can be shocked about it. But you can see that we closed basically right at that 200-day moving average, and then the stock opened right at it, dropped down, and then spiked up and ended up pulling back here to $1.21, but closed above this 200-day moving average, which technically is a bullish sign. But again, the RSI up here above 70. So that's why, if we go up a couple of more cents, I can understand it. At the same time, if we start to sell off and we pull back to like 109 to retest, that would be understandable as well. Because we technically, again, we were having rejections. And even here on this day with the big red candle, you can see we opened and we rallied up above the moving average, and then we rejected hard and started to drop down big to sub $1. So that's why now technically this is like the first time in forever that the stock looks like it is closed above the 200-day moving average. So only time will tell. But again, if you did step in recently up here in the ones, if it pulls back the next day or two, my point is, again, you can't really be caught off guard with that, so to speak. But the MACD seems to be steadily climbing over these last 6-7 months. So the stock, now that we went in this big sell-off and now we're having this immediate beeline kind of V recovery. But again, a lot of the fundamentals do support, in my opinion, a much higher share price. So this is why, again, it may be worth it to risk it here, in my opinion. On the weekly, we can see MACD's been climbing steadily. Now we're above the top Bollinger Band here on the weekly of 105. We're at 121. And even rallying to something like the 50-day moving average here of $1.57 going into these earnings, in my opinion, it might actually happen. Because the RSI here on the weekly over the longer term scale is only at about 57.5, right? So we're only slightly above the middle of the road here. And if this is what we were looking at last time too, the multiple rejections at the middle of the road at around that 50 RSI. And now you can see we just kind of broke above it. The last time the RSI, look at this, the last time the RSI was above 50 on the weekly was, this looks like February of 2023, right? So what'd that take? That took 15 months. And again, this is what I mean when I personally look at these situations. If they're in the state of infancy, if they're in the downtrend, if they're suffering losses, no revenue is coming in, right? Last time they were saying, the ORGN 2 project got delayed or whatever. It's going to cost an extra couple of bucks more than they originally quoted. That's what I mean. In the moment, that is all negative. That's why when I looked at the stock back here, I knew it wasn't a buy yet. And I knew they would continue to beat it up. And again, I didn't necessarily expect 44 cents a share. But when I made the videos, again, you guys were following me along the updates, and I was calling the drops down, and that's exactly what happened. So again, not necessarily patting myself on the back, but just to reiterate that it is all about pricing and timing. And again, I'm not saying that the company couldn't work out and the stock was a POS. All I'm saying is I would much rather buy it down here at, $2, $1.40, as opposed to forcing my way in here at 6, 5, 4.5, and just hoping and praying that, they get some big contract or some big announcement and boom, the stock explodes up here into the teens and I look like a genius. Right? I'd rather sit on my hands, wait and see. That's why I always say, in my opinion, much more advantageous to actually let the company prove itself to you. And we can see it really didn't start to do that until around here, after the ball dropped this year, going back the last 1 or 2 quarters. Right? And again, this was unfortunate. This continued the sell-off. then they were continuing to beat it up in my eyes, basically assuming that the company would be behind schedule. And now you see again, the 12.2 million estimate was much higher than everything before. So again, they just came off the miss of 14.8. So now we're still at 12.2. That's why, honestly, in my opinion, I probably expected, if we go back, I don't remember, but I probably expected the company to come in light on these revenue numbers as well. But they happened to post 13 million. So this is what I mean. This is why the potential recovery, the bottoming, the worst may potentially be over for ORGN. And this is why now we have a lot of people piling back in, and the stock has been gaining some momentum. But again, if we pull back to like the low ones here, sub 1, and then we rally the couple of days going into earnings and we get up close to this 50-day moving average, in my opinion, it is feasible. It is feasible. I just want to check the pivot points real quick. I'll let you go. We can see, yeah, on the weekly, next pivot point up here at 259. So our next stop on the weekly, our next target has to be that 50-day moving average of 157. If we switch over on the daily, we can see we recently jumped up above resistance level 2 here of $1.06. And again, you can see even today, even after opening, the stock dropped down and retested that 106 level and then bounced off and obviously closed up 10%. So we can potentially continue to go up and up. But right here in this immediate short term, because we have earnings coming up soon, in my opinion, they're going to try to keep the stock up. And that's why, again, we could potentially slightly sell off, retest the 200-day, retest this new support level now at 106. But chances are, in my opinion, I would potentially be a buyer here. And that's just me, that's just my opinion. But in my eyes, I would potentially be a buyer here. And again, if it dips down, potentially look to add to the position. But of course, we have to keep an eye on these earnings. And like I said, it looks like the losses are going to be in check. So I'm personally not too worried about the EPS side. I'm much more worried about the revenue side. So, just a heads up again, if this company happens to come out light, they post like 5.4 million, the stock is going to get smacked up again. I'm going to tell you that much right now. But again, that's just my opinion. But it does seem very matter-of-factly, right? Because we just started gaining this momentum now. We're in this reverse swing. So the last thing you want now is a light report. That is the last thing you want. But I know a lot of you have been in this for a while, up at $4 or $5, and this big drop obviously stings, really sucks. Some people were able to add to the position and average down. Other people kind of got screwed. Now they're just holding the bag up at 4, so they're just kind of waiting for the rebound. So unfortunately, it may take an extra quarter or two longer than you might like. But again, looking at like the liabilities dropping, again, book value sitting here at 290. The debt technically did increase, but it's only 9.7 million. We have a market cap here, 176 million. I think they're expecting 34. No, wait. 31.64, right? But then expecting a double going into 25. That's what I mean. So 2025, they're also expecting, that's when the Origin 2, I believe, is going to be up and running. And that's when they supposedly say that they're going to be potentially profitable. Let me see here. This is from last earnings. 2024 cash burn reduced to between 55 and 65 million. Significant gross profit generation expected to begin in 2025. This is what I mean. This is why, again, right now, we could have these little seesaw moments here coming in and out of these earnings, right? We could have these big rallies, then we could have these big sell-offs on misses, but then we could rally back up to $182 on a beat, and then we could potentially pull back on another miss. So this is why, again, I said 2024 may be a rocky year for Origin, but again, with these estimates down here at 648 and last quarter 13 and then 7.1 and then 6.9 almost, with estimates here at 6.4, I, in my opinion, would consider taking a position and seeing if it works out. But that's pretty much it for Origin Materials. But I do, shout out to Venus in the Discord. Mention that, hey, Origin's been moving. Why don't we do a quick update vid? And honestly, it's looking good. Honestly, it is looking good. We are potentially turning that corner. And now we may be talking about a completely different animal. But, we'll try to look into it after they report earnings. And we'll see how those numbers actually came in. what any potential future guidance was moving forward, what they have to say, update us on, again, the ORGN 2, and we'll take it from there. And that's pretty much it. So once again, Stocks by the Numbers, I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That's all I ask. That is how you help me help you. But more importantly, moving forward, like we always say, I understand that these markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You guys have a good day.